Welcome to the Daily Brief, where I'll go over the highlights in the market for Wednesday, October 12th, and then we'll briefly look at the highlights for Thursday, October 13th. And this will be the only video posted today. It was a really slow day on Wednesday. We were in a very narrow range, even though the PPI was released, which is a pretty big economic report. The markets are really waiting for Thursday for the CPI to come out. And so there was not a lot of movement in the market. And our charts have actually settled a little bit. They've had a few days to catch up, and we're at a pretty critical point right now. We're looking oversold, both short and intermediate term, and you could even suggest long term. And so if the market is going to bounce, if we're going to find something positive to come up out of, we're pretty close to that point if we're not at it already. And it might be the CPI release that really is the catalyst to determine what will happen going forward. If the report comes in hotter than expected, we're probably going to go lower. If it comes in weaker than expected and the market likes it, then we might be able to see a bounce out of this with a potential of things turning more positive. If there's a lot of ambiguity in the report, we're just going to kind of flounder around the way we have been lately. We do have retail sales coming out on Friday, and so that'll be kind of a big deal as well. But the thing that we need to just watch for right now is this is a very critical point. This is kind of the line in the sand. And if something's going to happen, it better happen pretty soon. So let's go back and just talk about what happened. It was a real yawner of a day. We had a pretty flat open, a little bit higher, a little bit lower. Prices spent most of the day between the daily pivot at 35.99. You could almost say 3,600. You think that's a pretty critical level right now? And the unchanged level. So we just kind of bounced around, and there wasn't a real big difference between the two. We closed at the low, so there was some selling going in there. We were down 1/3%, and volume was below average. So people are really stepping back right now. The technicals, they're negative overall. You cannot dispute that based on all the charts that we look at, everything from moving averages. The oscillators are still kind of mixed because they're really confused. And the other things that we take into account are pretty much pointing down right now, but they're looking extreme negative. We're also at some significant support, and I'll show you that. Because inflation and interest rates continue to be the story of 2022, that's what the markets are fixated on, and the CPI is the major report telling us what's going on with all of that. We do have all the geopolitical concerns, the Russia-Ukraine situation. At least in Wednesday's session, the UK seemed to be a little bit more under control, but that could flare back up at any time. And then we did get the FOMC meeting minutes that came out. So we had some Fed speak and all. There's really nothing new in that report. So the markets were very quiet ahead of the CPI report. If the S&P is, I should say, the S&P is at or near a very critical point right now. If a bounce is going to happen, it better happen pretty soon. And the meeting minutes that were released, there were no surprises in that. It's the idea that the Fed is really fixated on getting ahead of inflation, and they're going to keep raising interest rates. They're not really worried about the other areas of the economy, at least for right now, until they're satisfied that inflation is getting more under control. Now, is there going to be a scenario if the CPI comes in friendly? The UK has already kind of pivoted already. They were going to say, no, we're going to stick right on top of inflation. We're going to keep raising interest rates. Well, that started to fall apart in the UK. Is the Fed going to maintain that same thing? What if things are really weakening in the US and they might have to pivot from an inflationary stance to more of a, my gosh, the economy's going in the toilet kind of stance, and we better do something. So that's what some participants, because the fourth or fifth time now they've tried to create this scenario that inflation is topped out, it's going to start coming down, and that in the near future the Fed will then pivot to more of a neutral stance or market friendly stance, and that will give some support to stocks to go higher. Well, we've been fooled by that many times in 2022. Will that develop again? We're seeing it happening in the UK. Might that happen in the EU? Will that eventually come over into the US? And will the Fed have to react to that as well? And the reason I say that is because they've been raising interest rates so fast. And a few days ago, I had the rate of change of how fast the Fed is raising interest rates, and it's just astronomical. We've never seen it that fast. And since it takes some time for these rate increases to work their way into the economy, we don't really know how that's going to impact things. We don't know yet. We will somewhere down the line, but by then a lot of damage may be done. And the S&P, it's trying to hold at that long-term support, that 200-week moving average. We're just a little bit below it right now, but I'm still looking at it as that support is holding for the time being, especially because of the lethargic nature of the markets right now. But it is also now oversold. We have a lot of extreme negative readings. We still have a lot of yield curves that remain inverted. That has not changed. Sentiment, that's another thing that could feed into this too. With these down days that we've been seeing, we're seeing, and I don't have the charts of this, we're seeing the Ridex bear bull ratio, that's starting to come back down. It's not spiking up, so that's not really helping us. But the American Association of Individual Investors, they're still very pessimistic. Our fear and greed index is extreme. So we're seeing a convergence of a lot of things really coming together right now, that if we're going to get some kind of a bounce, this is the type of climate that we usually have for that to happen. Now, what's going to happen if we don't get a bounce? What if the CPI comes in hot, it freaks out the market? Then we're going to have to shift. We're still negative anyway, but we're just going to have to look at, all right, how much lower are we going to go, and just take it as it comes for right now. The reports that we did get on Wednesday, we get every week, we get the mortgage applications index. It was down 2%, but that's less than what it has been, where last time we got this, it was down 14.2%. The PPI was up almost double more than what was expected. It was up 0.4%, where they expected it to be up 2%, but there was real muted response to that. And the core part that excludes food and energy, that's the part that a lot of the markets really pay attention to. That came in as expected. Our trend is negative and getting stronger. The ADX is going up with these down days, and it's above 20. The bias with the down day continues to be negative, and our last 2, 3, 4, 5 days are also negative. So here's the intraday chart, where we had pretty much a flat open going into Wednesday's session. The daily pivot, which is this dark blue line, that held up as overhead resistance. We never really broke above that with any conviction, and we came back down to the dash line. That's the unchanged level. And we spent pretty much the whole day right in here, but then we kind of dropped down to what had been the low set earlier in the day. So nothing was really decided. You've got a real apprehensive market right now. Here's the daily chart showing that from a short and intermediate term basis, we have dropped through support. We're now continuing to go down lower. So that is not good right now. It's that long-term support that I'm really keeping an eye on. And then down at the bottom, you can see where volume dropped to below average. Here's the chart that I'm paying attention to. This is the 200-week moving average. We have closed a little bit below that, but we're still right on that moving average overall. Now, I'm not trying to read any magical things into this other than what I'm seeing, but this is a tipping point where we could continue to go down from here, and things could get a lot more ugly. Like I said in my previous video, Jamie Dimon from JP Morgan Chase says we could easily drop another 20% from here. But there's other things that we're looking at too that suggest that we might be able to find some support. And that's the tug of war that's going back and forth. But if we can get back above this 200-week moving average and then find some support out of that, that could really help the overall picture. So what's our outlook for Thursday? Yeah, we're negative. That's pretty much clear right now, but we're oversold and we're near long-term support. We have the CPI coming out and jobless claims, with CPI being the most important. The whole list of geopolitical events, unless one of these other ones come to the forefront, it's inflation and interest rates that continue to be the real focus for the markets. Our scenarios, we still have to go with the down scenario because everything is pointed down, but we are oversold right now. So you can't take a lot of confidence in that. We're at long-term major support that the market may be able to use to go higher from here. So it's not really easy to have a lot of confidence that things will go down. We certainly can't have confidence that things will go up because everything is pointed down. So, and then we can't really go sideways at this point because the ADX is getting stronger. It's above 20 and it is negative overall. So it's really hard if you're a trend-based trader, if you're buy low and sell high. It's not really a mystery why you're waiting right now to look at things. So our conclusion is that we're negative, short-term negative oversold, intermediate term negative and oversold, and with the long term, we're just below that support level. Now, one thing before I end this, I want to point out to you in a video a couple of days ago, I attended a conference last weekend put on by stockcharts.com where Larry Williams, who's kind of a rock star when it comes to the markets and specifically with option trading, he thinks we're going up from here. I didn't feel real comfortable sharing a lot of specific information from that because I went to a paid conference, and well, they posted a video where he's pretty much saying the same things that I heard at this conference in a YouTube video, and that's public. So what I've done is, let's see, here's the link, but don't try to memorize this link. I will put this link in the description. He's really thinking that we're going up from here based on over 100 years of research with years ending in 2. And we're seeing a convergence of things that usually happen before the market goes up. So take that for what it's worth in there. Okay, so thank you. Have a really good day. It's likely that I will prepare a full-length video after Thursday's session because of the PPI coming out. Just bear with me on that. There's another Mariner game happening that's on during the middle of the night for me. So I'll just do the best that I can with that. So have a great day, and I will talk to you in the next video.